Good morning, good afternoon, good evening, everyone. Welcome to the 45th Emerging Growth Conference. I'm Anna Berry. So just a few notes for those attending. Today, we'll be running until about 3:15 Eastern Time. And during each company's presentation, you can submit questions through our webcast module. And the presenters and myself will try to attempt to address as many of these as possible at the end of the presentation. Now, when we do switch over to the next company, you'll see a black screen for a moment. Don't go anywhere. It's just us moving over. If you do experience downtime, refresh your browser and everything should work properly again. Our platform does work best on Google Chrome, so if you're watching from an Apple device, you have to hit the play button to start the session. Now, know that all of our conferences are uploaded to the Emerging Growth Conference YouTube channel, so please subscribe, youtube.com/Emerging Growth Conference. One last note. After today's event, you'll be redirected to the registration page for the next conference. So stay on or come back to reserve your spot early. Let's introduce our first company. We have Nightfood Holdings, Inc., trades on the OTCQB under the symbol NGTF. And it's the company solving America's $50 billion nighttime snacking problem and currently focused on establishing widespread national distribution of its sleep-friendly snacks in the high-margin hotel vertical. Nightfood ice cream began rolling into hotels across the U.S. in May of 2022. I can't wait to get my hands on it, too, when I go to my next hotel. Please welcome its CEO and founder, Sean Folkson. Welcome, Sean. How you doing today?
Great, Anna. Thank you so much for that fantastic introduction. I'm Sean Folkson. I am the founder and CEO of Nightfood, and we are the company solving America's $50 billion nighttime snacking problem. And what we know is that almost half of all snacking takes place at night, and the most popular choices tend to be both unhealthy and detrimental to quality sleep. And so we're going to discuss the hardwired biological drivers that make unhealthy nighttime snacking such a widespread problem. We're going to talk about how Nightfood plans to solve this problem for consumers, and we're going to talk about the immense strategic value that pioneering this category can have within the global snack market worldwide, in the global snack market landscape. So Nightfood is currently traded on the OTC as NGTF. We closed yesterday at 15 cents. The company is currently doing a Reg A Plus offering with units at 50 cents a unit. Each unit consists of 4 shares of common stock, along with 4 warrants at an exercise price of 15.625 cents. Now, we've had some really exciting developments recently, which we're going to touch on, along with providing an overview of the high potential category that we're pioneering and why we believe our ongoing national hotel rollout holds the key to long-term shareholder value. And what really gets me excited is the big picture and the upside that comes with solving this problem, where, again, it's a modern day problem, but it's deeply rooted in human biology, because what the modern consumer wants is in direct conflict with our hardwired biological programming. And the result is a significant consumer conflict, significant consumer problem, and an opportunity for the right brand at the right time. Now, here's the disclaimer slide. You can pause and read this if you like. It's also available in our deck, but I'm going to move on to the fun stuff. And what we know is that humans are biologically hardwired to crave excess survival calories at night. This is our biological programming, and we're wired to eat as much food as we can at night if and when it's available before the long fast, because from an evolutionary perspective, you don't know what the food situation will be tomorrow. This helped ensure and increase our odds of survival. But now that guy has become this guy, and the outdated human survival mechanism that drives those cravings is why it's estimated that over 80% of Americans snack regularly between dinner and bedtime, and why this nighttime snacking behavior will not stop. Cookies, chips, candy, and ice cream top the list because those things deliver calories very efficiently. Also because they taste great. Willpower decreases at night as well. So while your appetite and your cravings increase, willpower decreases. And that's why people that spend all day trying to avoid this stuff often end up eating it at night right before bed. And that is the result. And we know that just about everybody wants to make healthier food choices, and just about everybody wants better sleep. And research over the last 10 or so years has confirmed our core premise that what you eat before bed matters. Okay, there's a lot of factors that are going to impact sleep quality on any given night. The lighting, the temperature, how much exercise you got that day, how much sun you got, how much stress you're under. But of course, our favorite is nutrition and what did you eat, and specifically, what did you eat at night? Because the problem isn't just that these prehistoric cravings cause us to eat the unhealthy foods that we're trying all day to avoid, but more specifically, it's that eating those unhealthy snacks in the hours before bed can directly impair your sleep quality, which can lead to a vicious cycle. You eat the snacks at night, your sleep quality is impaired, then the next day, your appetite is actually increased, your cravings are stronger, and your willpower is actually weaker. So you're more likely on that second night to snack at night, to make those unhealthy choices, which would then further impair your sleep quality, and it becomes a cycle for consumers. And again, that shows what we're addressing here is not a trend and it's not a fad. It's the kind of massive opportunity that exists when a modern humans, their desire for what they want and what they believe is best for them is in direct conflict with their hardwired biological programming. And this is why people wrestle with this problem, not just a few days over a period of time, but it's days and days over the weeks and months and years and literally decades of our lives. And there's strong reason to believe that many of the biggest food companies agree that there's an important consumer problem here to solve. And we believe those companies understand both the opportunity I've just outlined and the risk that comes with either addressing it or not addressing it. So what are some of the biggest snack companies in the world saying? Well, here's Mondelez talking about it makes a big difference. People can eat healthy in the morning and then more indulgent at night. Here's Nestle talking about people looking to replace some of the junk they're having at night with healthier options. And here's Kellogg's, a company that is synonymous with breakfast and breakfast cereal, talking about, breakfast is a key occasion, but so is late night snacking. So in the US, it's estimated that almost half of all snacking takes place between dinner and bed. And the result is over $1 billion spent by Americans on snacks consumed at night every single week. And so while we're out there pioneering this category, I believe some, if not most, or even all of the largest food and beverage companies in the world are monitoring this situation. I believe they understand the potential threats and opportunities that would exist should this new subcategory of sleep-friendly nighttime snacking grow into the potential that I see and that I think they probably also understand. A new snack brand pioneering and dominating this nighttime snack occasion would likely hold tremendous strategic value in the highly competitive global snack market. So it's one thing to believe that the category is coming, but it's another thing to believe that, an early stage company can come in and actually create and dominate a $1 billion category. So the reality of it is it happens all the time in food and beverage. 5-Hour Energy came in, they pioneered the energy shot. They still control an amazing 90% of sales, unit sales. Here's Chobani Yogurt. They were not actually the first Greek yogurt on the market, but they were the first to, reach a level of commercial success. And they're the brand that consumers, view as synonymous with Greek yogurt. And they are over 40%. And Vita Coco, coconut water, again, almost 50% of the market share. And, none of these companies even existed 20 years ago. And each, within just a few years after launching, was the dominant brand in their space, and a position they managed to hold. And this is very important, a position they managed to hold despite fierce competition from, I'll say it again, from the largest food and beverage companies in the world. So what makes us think that Nightfood can be the category king of nighttime snacks? There's a few reasons. First, we are pioneering the category, and that in and of itself is not enough, but it is an important factor. And it often is a very important factor, and we expect it to be one in our case. Second, we're expanding into multiple snack formats very early in the category life cycle, and that ensures we'll have something for everybody. It ensures we won't be pigeonholed as a one-trick pony or just an ice cream company. And we're not just an ice cream company, and we're not just a snack company. We are the sleep-friendly nighttime snack company. And third, and I believe most important, is what I call the hotel advantage. And by focusing on the high context, high margin hotel lobby shops, Nightfood can establish both its brand and the category under the halo of distribution in some of the largest and most trusted hotel chains in the world. We're in select locations of chains like Fairfield Inn and Spring Hill Suites, Holiday Inn Express. We're also in select locations of Hyatt House and Courtyard by Marriott, Sonesta Suites, and many, many more chains. Here's a recent map showing our hotel distribution from a couple of months ago, our hotel distribution from coast to coast. We're in hundreds of hotels. You can see, I don't know how many states we're in, but literally coast to coast. And I'm going to focus the next few minutes on this hotel distribution and why we think our relationships with hotels are the key to unlocking tremendous investor value. So it's helpful first to understand the incredible concentration within the hotel industry. There are 56,000 hotels in the US, and almost half of them fall under these 5 companies: Intercontinental, Marriott, Choice, Wyndham, and Hilton. And what that means is that a few key decision makers, some of whom we already have relationships with, a few key decision makers can unlock tremendous national distribution. Now, one of these 5 companies launched us into one of their chains in May. This was after extensive testing in 2021. This is not a quick process to get in to the first chains, but we think that uptake will become more rapid, and we'll talk about that in a minute. So they tested us in 2021, made the decision to launch us in 2021. In May of 2022, finally rolled us out. After just a few months, they informed us that they're going to be launching us into more of their chains because of our strong sales results, but also because of the unique problem and we're solving and the benefits that we're offering, not only to the hotel operators, but to the guests, which is most important. Another one of these companies ran a test earlier this year, which they declared a success, and we're working with them to try to establish a rollout plan and a rollout timeline. And we mentioned recently we've got a corporate level relationship with a third chain from within these 5 companies, and we expect that to lead to distribution very, very soon. We're confident we're going to be able to grow inside the hotel vertical because hotels at their core are in the sleep business, and yet the snacks hotels sell are typically the worst of what we should be eating at night, of what we crave at night, and what can be sleep disruptive. Here are some pictures I took recently at a hotel I visited. This is a big chain from one of those 5 companies on the previous slide. And take a look. I mean, you've got the Snickers ice cream bars, you've got the Haagen-Dazs, you've got the Grandma's cookies, you've got the Flamin' Hot Cheetos, you've got the Swedish Fish and the gummy bears and the Twizzlers and the Hot Pockets and the Oreos. And look, wellness is a major trend in hotels right now, and we believe that as our distribution expands in the hotel space, additional pressure will be added to other hotels to also add sleep-friendly options. And when you think about it, how can anybody at these publicly traded companies, and I mentioned they're publicly traded because the decision makers have to answer to their directors and to their shareholders, who are also travelers, right? So how can anybody from a front desk agent up to the CEO, how can they justify the current snack selections that you see here without also adding sleep-friendly options for their guests? I don't think they can justify it to themselves. I don't think they can justify it to their shareholders, their directors, and I sure don't think they can justify it to their guests. Look, these hotels have invested billions helping guests sleep better. They've already made these investments, upgraded mattresses, pillows, linens, blackout curtains, white noise machines. And then when that valued guest who is trusting the hotel with their sleep, when they go down to the lobby shop because those nighttime cravings hit like we talked about, the hotel is basically forcing them to choose from among all of these high fat, high sugar, high calorie, and sleep disruptive snacks. The hotels are not just missing an opportunity to help their guests sleep better, but they're actually undermining the billions they've already invested in better sleep because they're forcing guests to choose between these many various sleep disruptive snack choices. And what I call that is they're letting their snack business interfere with their sleep business. They're letting their snack business interfere with their sleep business. And that's the current situation, but we don't think it can last that way much longer. The hotel industry is very competitive. And once Nightfood gets to a certain point in our national distribution, which I call the tipping point, which we think is coming very soon, I believe all hotels selling snacks will feel compelled and pressure from their guests and from the competition to have sleep-friendly snacks for their guests right alongside the legacy brands. And what we've seen so far is that Nightfood sells really well in the hotel environment. Look at these statistics. This was a controlled test in September and October across 34 hotels that sold only 3 brands of pints: Nightfood, Ben & Jerry's, and Baskin-Robbins. They were all $8.50 a pint during this test. And what we saw was that Nightfood captured 43% of the total pint sales. And here is independent data collected by Impulsify, which is the leader in hotel marketplace intelligence. They operate and service point of sale, self-service checkout in over 1,000 hotels across the country. Now, 30 of those hotels, a 30 hotel subset, sold only 2 brands of pints during September and October. That was Haagen-Dazs and Nightfood. And what we found was that Nightfood, just a couple of months into our launch, Haagen-Dazs has been around for 62 years, but just a couple of months after our launch, Nightfood was outselling Haagen-Dazs in 33% of those hotel properties, accounting for 39% of the total pint volume. And it's important to point out that Haagen-Dazs also benefited from a lower average selling price of $7.55 compared to a higher price of $7.90 for Nightfood. And what this data tells us is really important. Hotel decision makers do not need to sacrifice revenue. They do not need to sacrifice profit to make sleep-friendly snacks available for their guests. So why is Nightfood able to compete so powerfully in hotels? Well, there's a few reasons. One is it's a high context environment, right? This is not a consumer walking into the grocery store on a Tuesday afternoon to buy groceries for the week. People going into this shop at night, it just makes sense that, you see something healthier and sleep friendly. You're buying for immediate consumption. You're not buying for the future. Makes a lot of sense in that environment. A curated selection is the second point. If you walk into your local supermarket, there's probably literally hundreds of ice cream pint choices available. Ben & Jerry's might have 50 or 60. Haagen-Dazs might have 40. And there's freezer door after freezer door. People just will not see new brands very easily. In the hotel, what you see here is actually, in this picture, is kind of a broad selection. Typically, you'll see anywhere from 1 or 2 ice cream pint SKUs. 3 or 4 is probably average. When you get up to 5 or 6, that's a pretty big selection in that environment. And the third thing, of course, is the sleep-friendly messaging. Again, people walking into that shop, they're expecting that they might be about to make a mistake. They know that shop's going to be filled with temptation. And when they see something that says sleep-friendly, again, it's Tuesday night, you've got a big meeting Wednesday morning, you're about to go to bed, it just makes a heck of a lot of sense. We talk about margins in hotels. 3 key drivers of why those are stronger margins, gross and net, than what you would find typically in a supermarket. First is, these are 3 line items that that every food and beverage brand has when doing business in the supermarkets. You've got slotting fees, advertising expense, and trade promotion. Slotting is the cost you have to pay just to get your product into the store and on shelf in the supermarket. Advertising, of course, you need to let customers know in that supermarket that you exist and why they might want to consider you. And then every brand is expected to go on sale every couple of months in the supermarket. And when you see a brand on sale, whether it's Nightfood or Haagen-Dazs, it's not the supermarket that's absorbing that lower price. It is the brand paying for that. So these line items can eat up profits and drive tremendous losses in early stage food and beverage brands. And in the hotel environment, these line items just are either totally gone or really, really small to the point of not being particularly impactful on the P&L. I want to point out that Nightfood is not in the sleep business. We're not trying to solve the sleep problem. We're trying to solve the nighttime snacking problem. As a result, our snacks don't contain any drugs, no sleep aids. It's just nutritional foundation for better sleep. And we look at things like digestion and melatonin and serotonin production, blood sugar levels, acid reflux, anything that we think can help nutritionally. And what that looks like in our ice cream, as you'll see, is less sugar, less fat, fewer calories, more protein, more prebiotic fiber, which can be very helpful for sleep, plus certain vitamins and minerals. You see our ice cream contains significantly more tryptophan than other brands. Our cookies is going to be a little different. Again, you're going to see the same, less sugar, less fat, fewer calories, more protein, more prebiotic fiber. But in our cookies, we have inositol, we have added vitamin B6, and we're working on things like chips and other snacks. Every snack format can be expected to be sleep friendly in its own way relative to the conventional snacks in that format. So, for example, you probably shouldn't expect our chips to necessarily have more tryptophan than other chips, but we would find ways to be sleep friendly, other ways to do that. We've got thousands and thousands of online reviews. We average over 4.3 stars, which is really, really strong and really high. And to us, that confirms that we did a really good job of creating products that people enjoy, both in terms of taste and the nutritional profile that we deliver. And to do that, it starts with a team of sleep and nutrition experts, Dr. Michael Bruce, Dr. Lauren Brock, Dr. Michael Grandner, celebrity chef Chris Santos. We make a promise to the consumer, and this team helps make sure that we're able to keep our promise. These are some of the world's leading sleep experts. Our board of directors, Dr. Thanuja Hamilton, another leading sleep expert, Nisa Amoyles, and of course, Tom Morse, the original founder of 5 Hour Energy, the founder and president of Living Essentials. Operationally, in addition to myself, Simon Dang, Jerry Isaacson, tremendous consumer goods experience. Jerry Isaacson, former VP of ice cream sales for Unilever, overseeing efforts with brands such as Klondike Bar and Ben & Jerry's. And of course, Doran Stern, the former VP of marketing for Chobani, and he helped take them from 30 million to 850 million in just 4 years. So I want to come back to this concept here and, the number of hotels out there and the ability to potentially scale very quickly. We believe $10 per property per day is a realistic long-range revenue target per property across our snack formats. And while we expect revenue growth and profitability in the coming quarters, I think the bigger picture and the ultimate value of the company we're building lies in the strategic value of being the dominant brand in this new snack category that we're pioneering. Distribution in the largest hotel chains in the world doesn't just have the potential to drive revenue and profit, but we believe it can be the foundation for the launch of the sleep-friendly nighttime snacking category we're pioneering. From the strength of this hotel launch, we can roll into supermarkets and other mainstream and traditional retail, and we can do that from strength. Our view is that consumers encountering night food snacks in multiple formats in thousands of hotels and widespread distribution across the chains and the brands that you see here. If you walk into that hotel lobby and you see night food ice cream next to the Haagen-Dazs, you see night food cookies next to the Chips Ahoy, you see night food chips next to the Pringles, it really hammers home that message to the consumer that what you eat before bed really does matter, and that the distribution of the night food brand in that way in some of the largest and most trusted hotel brands in the world serves, we believe, as a de facto endorsement by that hotel brand of the night food brand, boosting our brand's awareness, boosting trial, boosting credibility, and most importantly, representing a significant strategic moat and strategic advantage over any late coming entrance into our category. Because ultimately, this is a category play, right? We believe the sleep-friendly nighttime snacking category is coming. There's over $150 billion spent in the US every year on the total snacks. And we believe that sleep-friendly nighttime snacking can be a significant subset of that category spend. And we believe the company that controls that category in the United States will carry tremendous strategic value as an acquisition target in the highly competitive global snack market, which is, of course, in the trillions. And that's what we're doing. We believe Nightfood will be that company. And with that, Anna, I'm happy to take any questions. I need some water because I just really.
You are passionate about this. I love it. You must have gotten a good night's sleep.
Absolutely.
I'm so excited. I've got lots of travel coming up, so I'm going to keep my eyes open for any products in the near future. Yeah. Really great stuff, Sean. You did mention other companies like Kellogg's and Mondelez. So what's to stop them from just launching their own brand and crushing night food?
Yeah, that's the question I guess everybody gets on Shark Tank too, right? So the reality of it is, and this is the best part, there's really nothing stopping them. So, which is great for us. The reality of it is that those guys are not going to mess with anything unless they have confidence that it can be potentially $1 billion brand for them. And so I think they're taking a wait and see approach. The beauty of it is, I know a lot of people are always concerned that the big guys are going to start in, but in our case, think about how powerful that would be for our investors and our shareholders, right? If all of a sudden one of these companies started to launch, either they announced it or they did it stealth, and all of a sudden they showed up on the marketplace with their new brand, whatever, PM Snacks or whatever they wanted to call it. Think about that. There's a huge number of global players that would need to respond and react immediately, or they would risk leaving the whole market to that one company that launched. So what would happen then if somebody did launch is, I think you would have a big handful of these billion-dollar snack companies in this highly competitive space, and they would need to scramble to do something to compete. And the easiest way to get to market is not to start having meetings and trying to develop something in-house and formulate and develop packaging and then bring it to market. The easiest way would be to acquire an existing brand that's out there with distribution like Nightfood. So if one company were to start and launch, I think what would happen is, I don't know if I'm allowed, I guess, a bidding war type situation in this hypothetical. I need to, have all the disclaimers. This is a hypothetical situation, but I don't see any other scenario, because any company that doesn't bid for Nightfood in that scenario is basically, forfeiting the whole category. Look, we don't know if it's going to be $100 million category, $500 million, $1 billion, $2 billion, $5 billion. And I don't think these other companies, these big global companies, know yet either. That's why they're watching us. But I can tell you that if one company were to launch, I think it would bring in a lot of competition, and we would be in a very, very enviable position at that time.
Good place to be. And it seems like you already have great momentum. So what do you project your revenues to be in 2023?
So we're not making revenue projections. I think, the key to keep in mind is that the timing of the launch into some of these chains is hard to predict. Getting into a few thousand extra hotels because a couple of chains put us in, if that happens in May as opposed to January, think about the impact that would have on our revenues and how difficult it would be to accurately project. And then on the back end of that, it's hard to tell exactly how quickly the other companies will come into play. We're not focused on, revenue targets from month to month. We're focused on forcing the hotel industry towards what we call the tipping point. And the tipping point doesn't mean a revenue number for us, and it doesn't even mean an exact number of hotels or a number of chains. But the tipping point is when all the hotels out there that don't have Nightfood go from viewing it as an opportunity, right? We should have Nightfood because it's good, because it's helpful, because it's good for our guests. And they go to viewing not having Nightfood as a problem, right? Like, it's a problem because some of the other hotels have it, and now they are left behind in the eyes of the industry and the eyes of their guests. And at that point, we expect uptake to happen very, very rapidly. There's not going to be the need for all these tests and the long delays, that we've honestly experienced. So trying to project revenues at this point would be, I think, fruitless. But we are pushing towards that tipping point. We expect it to happen very soon. We've got some distribution opportunities that we're very excited about that we think are going to happen very soon and imminently.
And so you did talk about the potential acquisition. So what kind of valuation or multiple do you think Nightfood would be able to command?
Well, it's really hard. There are certain transactions that have happened over the last few years, whether it's, Perfect Bar or, I'm drawing a blank on some of them, but, there's been so many, and Value Who Chocolate, by Mondelez, they're all over the map. But, it's really hard to predict because, again, I don't think we will be being acquired for our revenue and for our free cash flow like a lot of more mature businesses are. I think that if and when that acquisition were to happen, it would be in a scenario where you've got multiple global food and beverage companies feeling that, there's this multi-billion-dollar category that's up for grabs. And I think that with the hotel distribution, we're going to be in a position where Nightfood is going to be the clear favorite to be the brand that dominates the space. And so that would lead to that, along with potentially being in a situation where there's 2 or more potential buyers, would lead to a situation where the acquisition value that we're able to command would not necessarily be connected to any multiple of revenue or multiple of free cash flow, but rather to the future-looking strategic value of what we're delivering to these brands, which again is, on a silver platter, in my opinion, the future of this nighttime snack category.
Sean, we're running out of time. There are quite a few questions about finding out which chains and supermarkets, drugstores, hotels you're in. So where can people find out more information of all that?
Well, the best thing to do is go to invest.nightfood.com. They can learn about the current Reg A Plus offering, which again is 50 cents a unit for shares of common stock in that unit, along with 4 warrants. And if they go to invest.nightfood.com, they can research us there. And then, of course, they can email investors@nightfood.com with any questions.
Thank you so much for joining us on our conference. And please come back again with some updates. And once I try it myself, we'll give you some feedback. I'm sure it's delicious.
Always my pleasure, Anna. Thank you so much.
All right. Thank you. All right, everyone, stay with us. We'll be right back.